Hi, and welcome to this week's Stock Scores Market Minutes. This week I want to talk about how to trade emotion. To beat the market, you have to take advantage of breakdowns in market efficiency. Now, that can be having better information than others, but another important breakdown in market efficiency is fear and greed, when emotion is playing a role in pricing. And you can see emotion in price when trends go parabolic, either up or down. Now, what do I mean by parabolic? Well, if a trend is going like this, we can say that that is linear. If a trend is going like this and it gets steeper and steeper, that's parabolic, and you can have that to the downside as well. It's situations where the trend runs away from the trend line and you have a space between the linear trend line and where price is. And when that happens, price typically comes back to the trend line. Now, we want to wait for the process to start, but this is a great way to take advantage of the inefficiency in the market that comes with emotion. Here's an example of Nike from the past week. You can see it was in a linear downward trend, but here it had gapped down and run away from the trend line. And look what happened. It came right back up, got stuck at the trend line, and then continued on its way down. So that is how you take advantage of emotion in the market. All right, let's get into this week's market analysis. Kind of an interesting sideways week, pretty boring. We talked about the likelihood of this happening last week because the market is dealing with a lot of resistance and volume is light. What's interesting to me is that on all the days when the market showed weakness at the open, which was here, and again today, each day it came back to fill in those gaps. And that is a sign that the buyers are stronger than the sellers. There's some selling pressure at the start of the day, but they can't really gather any momentum to the downside, and the buyers end up being stronger. Now, in the longer term time frame, if we were to draw our trend line like this, of course, we've broken that. But that doesn't mean that the horizontal resistance at these old price peaks doesn't matter. And we're still going to see the market struggle to get through that. But once it does, if it can pop and make a real sustained break through, let's say, the 214 level on the S&P 500 ETF, we should see it move higher. Now, the big problem right now is that real lack of volume. You can see very low volume. Admittedly, this week was a shortened week, but even if Monday had been a trading day, volume would not have been high overall. Looking at the Russell 2000, which is the small cap index, you can see we've broken the downward trend line and we're actually moving higher. We have until about there before we're going to catch our first bit of resistance. So it does seem like money is finding a little better place to go in the small caps. On the Toronto Stock Exchange, the trend here is up. We're in an upward sloping channel. We're not at the top of the channel. We're not at the bottom of the channel. We're just a little bit above the middle. So upside is still good. This is a bullish chart in the short term. Longer term, we also have an upward trend line. We've been able to break through that level of resistance. So the next stop is up in here, but things do look good for the TSX. Strength in gold on Friday, which was basically on the back of weakness in the US dollar, the speculation that the Fed would not raise interest rates after a weak jobs number. Well, that helped the TSX Venture catch a bid after a few weeks of sideways trading. Still stuck underneath that resistance from back in 2015. It's going to take some time to get through that, but no sign of a breakdown on this market yet. Also, that weakness in the jobs number caused the US dollar to go down, caused bond prices to go up. And of course, you know that if bond prices go up, that means interest rates go down. And that is basically what's happened here. We're getting a little break out of this rectangle consolidation. That should lead to higher prices, but it doesn't have very far to go before it gets stuck at resistance. US dollar spiked down for the week because of that weak jobs number. Hasn't really broken through any support yet. I don't think this is a definitive sign that the US dollar is going to continue its downward trend line, but it has, after trickling through the downward trend line, it has rolled over and held. I still think we see this break to the upside ultimately. I don't think one weak jobs number is going to make the Fed stop, but hey, doesn't matter what I think, it matters what the market thinks. And right now, you see what happened with gold, a big spring back this week from last week's weakness, holding support only barely. I want you to watch very closely. If this support line gets broken, the party is over for the gold stocks. I talked about that in my daily newsletter on Thursday night. It bounced back on Friday, so the gold market is still okay, but it's hanging by a thread. Oil, trickling higher very slowly. Kind of a boring market, not so much a buying market, but rather one where there's not a lot of sellers. The sellers are exhausted after all this weakness, and now it's just sort of a slow trickle to the upside on oil. Fear is at a real complacent level. When we get this low, we often see bounce backs in fear because eventually, the sellers find some motivation to act. With that said, there is no sign in this chart or really in any of the charts that there is momentum being picked up by the sellers. In fact, it's quite the opposite. So you don't want to get too bearish yet. So U.S. stocks, long-term bullish, sideways trading in the short term makes this neutral. Canadian stocks bullish on both time frames, not exorbitantly so, but slowly trickling higher. Gold, I've raised my rating back to neutral for this week because of that big spike on Friday, but I do think gold has work to do. Long-term trend in oil is bullish, but short-term it's kind of grinding its way sideways and seems to lack motivation. Stocks continue to move up on light, complacent volume, and complacency is really the word of the week. It seems that there is an absence of sellers, more so than presence of a strong buyer's market. Gold got a surprise lift on Friday, but still has work to do to overcome the drift that it has been doing lower in the last few weeks. Oil trickling up a hill. Both buyers and sellers appear complacent. There's that word again. And finally, the VXX shows extreme complacency. Well, that has been the Stock Scores Market Minutes for June 6, 2016. Have a great week in the market and trade well.